If you invested just $300 every single week into the stock market, you'd be a millionaire in 20 years. But if you don't want to wait that long, keep watching the video. Today I'm going to bring you through how you can start investing, what brokerage, how you should be investing, and the different levels of investing and how much you can grow your money at those levels. Let's start with my journey so far. I started investing in 2021 during COVID when I was bored and was interested in learning about the stock market when GameStop and AMC and all these kinds of stocks were going up and up and up, making random people millionaires overnight. Now, I was 17 or 18 at the time, so I wasn't very patient. I started trading options, which are leveraging stocks, not what a beginner should be doing, which is why I made this video today to show you how you should approach investing. But I managed to turn $400 into around $3,000 at the peak. But obviously, you know how this story goes. After a couple months of staying up all night, watching the stock market every minute and making tons of trades, my account went to nothing. Even after bringing my total amount invested to almost $2,000. Now, what did I learn from this? That I should have listened to everyone else when they said you can't get rich too quick. And if something sounds too good to be true, it probably is. Now, I'm not saying you can't make money that way, but I definitely did not have the experience and the knowledge of the stock market to be making money like that. And it was pretty much gambling for me at that point. But now, 4 years later, my portfolio is at $60,000. I'm currently up over 80% in 1 year. And the money that I'm earning is actually being put to good use. I made a lot of mistakes through my journey of investing, but now more than ever, I feel like I know what I'm doing and my track record shows it. I focused on investing in high quality stocks, investing as if I was actually buying a piece of the business rather than just buying a name that everyone was telling me to buy and that I was seeing online. And companies that are actually growing fundamentally and are relatively protected from market downturns. I know the feeling of losing a majority of my portfolio overnight, and that's helped shape the kind of investor I am today. Before we get started investing, we need to know how we can actually put our money into the stock market. Now, I do this through online brokerages. The only two I'm using at the moment are Interactive Brokers and Moomoo. They're both regulated and insured up to about 250 to 500,000 USDs, so a majority of you guys should be safe. I'll leave sign-up links below so you guys can quickly get started. So now you've got your platform sorted, how much should you be investing? For me, I like to invest every week, every time money comes into my account, so I know that it's not going to food and going out, but it's going into growing my portfolio. If you can't afford to invest every week, I'd say at minimum you should be investing every single month, if not fortnight and ideally weekly. Because these platforms have such low fees, you can invest hundreds of dollars at a time, and the fees are pretty much negligible. Now let's look at how you should be investing according to your experience. If you have no experience in the stock market, you shouldn't be looking at individual stocks or anything else, you should be looking at index funds. These are pretty much bundles of stocks that are grouped together that you can purchase as if it was a single stock. Take the S&P 500 for example. The S&P 500 are the 500 biggest companies in America. When you trade stocks in big bundles like this, you're going to experience less downturns and you're going to be going up at a steady rate at about 10% every year, like the S&P 500 that's been growing at 10% every single year for the past 100 years. Now, you can also look at other index funds like the NASDAQ 100, which are the 100 biggest tech companies in America. This one specifically has been growing really quickly over the last 5 years. It's up about 113%, which means that you've more than doubled your money in the last 5 years if you invested in this ETF. Now, the reason for that is because of big tech companies like Google, Meta, Apple, Nvidia, Tesla, and all those companies that you've heard about before. That leads us into our next category. If you want to spend a little bit more time looking at individual stocks, but you still want to be safe and follow the market, you can look at companies like these. Right now, they're called the Mag 7. That's Google, Amazon, Apple, Tesla, Meta, Microsoft, and Nvidia. These stocks are pretty much mini ETFs. Or index funds. If you look at Amazon, it has its main business, which is its e-commerce, which is where I'm sure you all know how Amazon works, but it also has things like Amazon Prime, AWS, Audible, Twitch, where it's a bunch of different industries blended into one company. So if one industry falls, the others will hold it up. Now, what you can expect from these companies is that it'll grow slightly quicker, maybe at about 15 to 20% a year, depending on the current valuation of these stocks, but you may experience some volatility. If we look at Meta, for example, we can see that in late 2021, it reached a peak of about $380, but then crashed all the way down to just about 100 in just a year. That's about a 75% drop from your peak. But from then, it's gone all the way back up to 600 where it is now. So if you can't handle the volatility and you need quick access to your money, investing in these big tech companies may be scary, but the rewards are really high. Now, moving on to the next type of investing, this is where you've got a little bit of experience and you know what you're doing. You know how to assess companies and you know how to value them. and you know how to avoid big risks or take big risks. If you've watched my previous videos, I talk about companies like SoFi and Shift4, and these are good examples of companies that I see have high growth, high amounts of cash, are protected from downsides, and are massively undervalued, which is when I look to buy these companies. They don't come around very often, but when they do, this is when you want to double down and really invest heavily in these businesses. This way you can see growth of about 300% or more, still growing at a high pace compared to the rest of the market, even after it's gone up that much. This is because when these stocks go undervalued, they're not as famous as names like Google or Meta or Nvidia, and people kind of just forget about it for a while, and you have all the bad sentiment come in and push the stock lower. It's harder than it sounds to buy these companies at these prices, but when you've done the analysis and you looked at the fundamentals and you actually know what these companies are intrinsically worth, that's when you see the highest returns. If you want a bit more insight into how I made these decisions, check out my previous videos. It'd be a bit too long to go into my thesis and my thoughts on each of the individual stocks that I own in this video, but you can check out my previous videos if you do want to know. Now, moving on to the last style of investing that I rarely do, but I do pick up when I get a bit bored. This is going back to options trading. Now, it's a bit complicated, but basically what options are contracts for stocks. Now, it sounds complicated, and it kind of is, but it's basically 100 shares of one stock, and you're leveraging that either to the upside or the downside, and you can make a lot of money and lose a lot of money. I wouldn't recommend this if you're new to investing, just like I was during COVID. It's a quick way to the bottom and a lot of time and effort wasted. I'd much more recommend going the slow and steady compounding way where you can leave your money in there for 5 to 10 years, not worry about it, come back to 10 or 20 times the amount that you invested initially. I would say only trade options with a very small amount of your portfolio, and think about it as gambling. You go in there and you put in money and you expect to lose it, but you expect to either get some fun out of it or gain some more knowledge. I trade options at a very small percentage to my portfolio, and that's mostly when I have a good idea of where a stock is going and I want to leverage the amount of capital I have to be exposed to the gains if I am right. But overall, I would just say invest as much as you can every single week, buy either index funds, big tech companies, or individual stocks that you've actually put in the time and effort to research. The important thing here is to stay consistent. Invest every single week, don't break that habit, and set aside money to grow your portfolio rather than spending it on things that you'll forget about and things that don't actually improve your lifestyle but just hold you down. Now, I wanted to end the video by showing you just how much you can grow and really pushing the boundaries of how much you can earn. Now, let's look at the example that I gave at the start of the video. $300 a week at a 10% growth rate, compounding for 20 years. As you can see, that would be about $312,000 that you've put in over the 20 years with interest of $675,000 at a total value of almost $1 million. I think it's about 304 where it's $1 million. Yeah, 304. So that's what you need to become a millionaire. Now let's push this a bit. If we take my 80% growth rate that I've done in the last year over 20 years, depositing $1,000 every week, we end up with that much money. Now, there's a reason why 80% doesn't sound sustainable. It's because if you could do that for 20 years, that's what you end up with. Now, if we look at something more conservative around the 20%, that's a bit more doable investing in individual stocks over 20 years, we end up with about 13 million. Now, you can see that most of the money that's been earned here is from the interest of about 12.4 million. So over 20 years, you've put in about $1 million and you've earned 12.4 million. This shows you how important it is to grow at a higher rate than average, and why I prefer to pick individual stocks and spend the time and effort to actually find those quality stocks that I expect to see these kinds of growth rates from. Now, I look generally for about 30% compounded growth over about 5 years. And if you want to know more about that, you can watch my other videos. I hope you found this video useful, and I'd really appreciate it if you subscribed, liked, and left a comment, letting me know what else you want to see. Thanks for watching, and happy investing.